Talab.
I can see it on my.
Okay, it's not looking pretty out there. 45,665, and this is the day where we're doing kind of like the last stream for the year. And even though we were all expecting a $100,000 Bitcoin at the end of the year, and we all thought that Ethereum may get to $10,000, I think we should take a step back and kind of take a look at what we achieved this year. I mean, if you look at Bitcoin in the beginning of 2021, let's have a look at where it was. I mean, it was about there. So you are talking about a 3 or 4x or just under a 3x on Bitcoin, or 2.5x on Bitcoin. You look at Ethereum at the same time frame, you've got yourself, let's quickly look at where Ethereum started the year. Let's say around $900. So Ethereum almost at a 4x. Then you do have other tokens, Luna, 100x for the year. So yes, we didn't get our $100,000 Bitcoin that we all hoped for. We didn't get the $10,000 ETH, but we must celebrate the fact that we had an unbelievable, fantastic year in crypto, and we shouldn't let a few weeks or a few months of weakness overshadow what a great year we had in 2021. But anyway, there are only a few more days left in 2021, so today is actually all about 2022. And today we're going to explore all the hottest narratives, the hottest topics for 2022. We're going to prepare you for everything that you need to know in crypto in 2022. So it's going to be probably the most important show that we've made this year. It's also going to be the last show that we're doing this year. So it's going to be a big one. Let's get this one started, bro.
He's all about the DJ, baby. He's all about the DJ, baby. Uncle Ren's in charge. He's a crypto star. So savvy what he say. Fast money like a sports car. He's all about the DJ life. Make some money, change your wife. Big calls on the altcoins for the bull market hype. He's all about the DJ, baby. Cryptomanran. He's all about the DJ, baby. Cryptoman. He's all about the DJ, baby. Cryptomanran. He's all about the DJ, baby. Cryptomanran. Crypto banter. You got crypto questions, they got crypto answers. Jean-Claude Van Damme of the Banter fam. Could he kick it? Yes he can. Can he kick it? Yes he can. Cryptomanran. He's all about the DJ, baby. Cryptomanran. He's all about the DJ, baby.
Banter fam, welcome back. I'm Cryptomanran. I am here all the time, twice and 3 times a day, bringing you crypto love and crypto wisdom. And together this year, we have built the most loyal community in crypto and probably the fastest growing community in crypto. So if you're new to our channel, smash the like button, subscribe to our channel. This is the one channel that gives you technicals, fundamentals, gaming, covers everything in crypto, live crypto streaming, and we're building this up to be 24/7, 365. By mid next year, we should be somewhere close to that. Before we get into the show today, it is the last giveaway that we're going to be doing. It's the last giveaway that we're going to be doing, and that is because MonkeyBall is launching tomorrow. We said it is launching tomorrow, but it's launching tomorrow. As I predicted, it's going to be launching on, you know where it's launching? FTX. So it's launching on FTX tomorrow, and so there are a few more giveaways that we have to do. If you do want it, I don't want to destroy the show by doing giveaways on the show, and I want to give everyone a chance. So all you need to do is go to my Twitter. There is a post on my Twitter that says last chance for MonkeyBall $100, and go to our BBS, go to the BBS, and there you can enter, just drop your Solana address. We'll choose 3 or 4 more winners, and that will be the end of giveaways for this year. That's it. That will be the end of giveaways for 2021. And this will be, I think, unless something drastic happens on the market, the last show that we're doing in 2021. And it's not the best day to be doing a show because it's a bloodbath out there on the markets, not only on the crypto markets, but if you look at like what's going on the markets out there, it's not pretty. Almost every market in the world is down. And it seems like it's a combination of the Fed tapering, of Omicron, of just concerns around a slower economy. And yeah, it's bringing down the markets. And Bitcoin is, I think it's holding pretty well. It's still around $46,000. But you cannot have Bitcoin flying if the rest of the markets are going to continue to go down. So this is just one of those times where we have to sit back and let the market do its thing and hope that this whole thing turns around. Speaking of turning around, well, I guess the question is whether we can expect a drastic turnaround in 2022 and whether we should prepare ourselves for a bear market. Now, we all think that there's going to be a bull market, but we'll talk about that today. We'll talk about the hottest trends in 2022. We'll talk about some of the successes that we had in 2021. And all of this is done on the back of a report. Now, I feel like a schoolboy because that's the report. Literally, I printed it out. It's 200 pages. It's 200 pages of reading, Luki. I read 200 pages. And just when I thought I wasn't going to do any more shows this year, I read this report, and I thought, if we don't bring Ryan Selkis on, and we don't talk about the hottest trends for 2022 in 2021, then our entire market is going to be at a disadvantage because we're going to get into 2022, and then 2022 would have started. And everyone says, 2021, we expected $100,000 Bitcoin and everything else, and we didn't get that. We didn't get that $100,000 Bitcoin, but we got a lot more. We got NFTs, where if in January I would have said to you, we're going to have NFTs and NFTs are going to take over the world, you would have said to me, you're absolutely crazy. We got billions of dollars locked into DeFi, which no one could have expected. We got Solana, we got Luna going to number 2 in terms of TVL and moving into the top 10 tokens. We've made huge advances on blockchain. We've got institutional adoption. We've got Bitcoin as the store of value. We've got the smartest money in the world, the smartest venture money in the world, all flowing into crypto. And all of this was achieved in 2021. And yes, we can look at the price and we can say, okay, well, we didn't get the price that we wanted. But I mean, we've still done a 2.5x on Bitcoin. We've still done 4x on Ethereum. We take the market cap, the total market cap. Let's look at it from the beginning of 2021. Where were we? We were at about 751 billion. We're on 2.2 trillion. We have Bitcoin crossing the $1 trillion for the first time. We have crypto getting to very close to, and I don't remember if it actually touched $3 trillion, but it was very close to $3 trillion. So we've come a long way in 2021, and we should celebrate. We should celebrate instead of mourning the fact that we're going through a slight correction or maybe a slight bearish cycle after what has been an unbelievable year in crypto. And I guess the first question that we need to ask is, do we think that this bull run is over? Do we think that we're going into 2022 and we're going to get a 2019, 2020 type long-term correction? And then maybe that's a good place to bring in Ryan Selkis, who's the founder and CEO of Messari. And they are the company that actually wrote this. And we're going to go through this today. We're going to talk about all the trends and narratives for 2022. Ryan, welcome, my friend.
Good to see you, man. Thanks for having me.
So good to see you. You guys have been busy, man. This is hours and hours and hours of work, right?
About a month.
A month for how many people?
What's that?
How many people?
Well, mostly me. Taking the month off, and but it kind of builds on a lot of our team's research throughout the course of the year. But for something this large, counterintuitively, it's actually much easier to have one person holding pen and tapping in folks on a few different sections. So I'd say, there's 122 sections. I wrote about 110 of them cover to cover, and then tapped in analysts on our team like Ryan Watkins and Wilson and Mason and Aiden, a couple of others for different, kind of subsections. But it did take basically the entire month of November, but it's been a good exercise and good marketing asset for us for the last few years. So going to keep doing it as long as it pays off.
I mean, I must say that it is so concise. I mean, you talk about you cover topics, and you cover a lot of topics, and you cover them in a huge amount of detail. And it looks like it's 200 pages of reading, but it's actually not that much. I mean, it's not that little because it references tweets and it references articles and it references statements. And so if you want to do the thing justice, you got to do what I did. And you literally have to read it 3 or 4 times. I eventually resorted to highlighting certain parts of it, like a schoolboy again. So I actually literally studied the report. So I'm going to have a lot of fun talking to you about this report. But before we get into the report, you've been around for a while. You've seen bull markets. You've seen bear markets. You must have developed a thick skin for these type of corrections. Where do you stand in terms of where we are right now in the cycle? And the reason why I ask is, we had this hype around this cycle repeating 2017 and Plan B, recalling for the $100,000 Bitcoin and the stock to flow model. Do you think we hit the top of the cycle? Do you think that this is it?
I try to stay away from directional bets when it comes to the cycles, just because I think especially in this cycle, there's so many other external factors at play, right? The market in general has been running so hot. We've had basically 13 years of economic growth with a minor blip for COVID. The amount of money that's been printed is just absolutely staggering. And yet, you have this situation where rates are going to rise, and the Fed has, and I think governments worldwide have to get a grip on inflation. So we're kind of entering uncharted territories in terms of risk assets. And the biggest question is, how much is that going to discount kind of growth stocks, and with it, crypto? Is that going to be a net drag for a while? Or are people going to continue to kind of push their way up the risk curve because real returns are still negative with 7% inflation, even if the Fed hikes rates to 1 or 2%. So I think kind of everything ties back to how the general economy is doing, and on a quarter-to-quarter basis, I don't really have a strong opinion. I will say that if that was the high for the cycle, then the bear market is going to be more of like a legacy stock market bear market versus something like we saw in 2014, 2015, or 2018. In terms of like 90+% drawdowns and a lot of pain and a lot of infrastructure companies and teams laying people off or not really being sure if they're going to be able to kind of survive the cycle. So I think first things first, that's a lot different. If that's a shallower bull market, then we'll have a shallower bear market. But I also think that we
can call it a teddy bear market. It's like a teddy bear market.
Yeah, it's the teddy bear market, and I think it's probably on net healthy for the cooling off to have happened in this calendar year, because there's a lot of funds that have been distributing gains. There's a lot of tax selling, I think, in advance, which is a far cry from what we saw in 2018. And if you think about that as like a rotation from existing holders that gained tremendously in 2020, 2021, to new entrants that are starting to kind of build their positions, then the beginning of next year, we could see a continued uptick. But again, it's either a shallow bear market or bull market will commence. I mean, I would personally be surprised if we didn't follow a similar pattern to previous cycles where there is a blow off top at some point. And we certainly didn't see anything that looked like a blow off top on par with 2013 or 2017.
So I don't want to spend too much time about the macro cycle, because that's one of those things that you can talk about for a long time. I think we should rather spend more time on crypto and let the macro cycle do its thing. I know that crypto can't perform if there's a macro collapse, but I think we've got to just take into account that the Fed probably needs to keep some kind of market momentum, because there's a lot of money in there and the Fed's not going to do anything stupid. And so this is just an adjustment period. Let's talk about the report and let's start off with Bitcoin. So I think I think the one thing that we could talk about Bitcoin, I think the report started off saying, somebody check on Peter Schiff. And it spoke about how, Bitcoin has outperformed gold and stuff like that. Do you think that Bitcoin is now, that 2021 was the year where Bitcoin entrenched itself as the digital gold and is now going to continually disrupt gold?
I think it's been on that trajectory for a long time. If you look at the returns of gold over the last few years, it's basically gone nowhere. And you could argue that this should be a perfect macro backdrop for gold to rally and really outperform. And instead, I think what investors are looking towards is Bitcoin and crypto more generally as an inflation hedge. And Paul Tudor Jones, I think, had the best quote on this last year about Bitcoin being the fastest horse in the store of value race, right? So if you are long-term bearish on government spending levels and kind of the health of fiat currencies, and you think that inflation is ultimately going to hit the market one way or the other, as it has, then you can buy gold, which is the historical store of value, but it's not actually really performed that well over the course of the last decade when it should have. Or you can bet on something that's been much, much more volatile, but in the long term has been trending aggressively upwards. So I do think that's probably the right comp. The number that people usually triangulate on is the full market cap of gold, which is $11 trillion or what. But I think the more appropriate target is probably the amount of gold that's held for investment either by central banks or from professional money managers. And that's more on par with that's close to about 6 trillion. So if you kind of use those numbers, then the gold to digital gold flippening would be about $300,000 per Bitcoin. Certainly not 100x left in the Bitcoin market, which is why I think you're seeing Bitcoin dominance come down and so much more speculation in some of these new kind of sectors of Web3. But it's still significant headroom. And then if you actually start to win the global thesis of Bitcoin replacing fiat currencies, particularly long tail fiat currencies and kind of emerging markets, then things can get really interesting and we start to get into like the super cycle territory. But I still think that we're a few years away from that.
Do you think that Bitcoin is going to become a currency? And I mean, I know, we've been around for a while. We know the scaling issues. We're also following what's happening on the Lightning Network. We're watching the development in El Salvador. Do you think that Bitcoin is going to be a currency at some point? Or do you think that's going to be in the hands of other things like, I don't know, Luna, Terra, maybe even a kind of DAI or something that's more created to be money than a store of value?
I think it's a good question. I'd say all three options are imperfect right now. So if you look at who's most likely to adopt a cryptocurrency, crypto asset of some kind as a store of value, and as a true currency, it's going to be a high inflation country or one where the rule of law is relatively untrusted or unstable. And so Argentina or Turkey or emerging economies in Asia or Africa are probably the early places that come to mind, Venezuela. And you basically have three options. You have something like Bitcoin, which has the most staying power out of all of the crypto assets and is still the largest by a significant margin. You've got, on the other hand, stablecoins, which serve a similar function to their local fiat currencies, but are actually denominated in US dollars. And are arguably most people around the world that have unstable currencies would prefer a stable currency like the dollar that's going to maintain its strength over time, right? So then your options are basically twofold. You can own stable coins which have dollar reserves in some bank, and they're basically just kind of synthetic assets like USDC or Tether. But those are always kind of subject to seizure risks and some degree of centralization and censorship over time. Or you have things like DAI and UST from Terra and some of the decentralized alternatives. Those have their own set of risks, which are mostly around bank run risks and protocol run risks. And these aren't just theoretical. We've seen this happen. This happened with Maker during the early days of the COVID sell-off. We saw a similar sell-off and some potential liquidity issues with Terra in the May and June timeframe this year, in terms of like where the reserves were. But I think the answer to whether any crypto, particularly Bitcoin, will be a reserve, it just kind of comes back to trust and how some of these emerging market communities will view the volatility of the underlying asset and kind of what trade-offs are they willing to make. I'd say in the next couple of years, people might be much more willing to take on Bitcoin, given that it's been around for 13, 15 years, as you kind of extrapolate out. And they might prioritize that over, owning a US dollar asset that is ultimately going to have some risk that ties back to the US and US geopolitics.
And is depreciating at the rate of where people at the rate where money is being printed, at least. Let's talk a little bit about the dominance of Bitcoin. So you spoke about the dominance, and we know that the dominance has come down, and I think it's probably on 40 right now as we speak. But yet you still believe that Bitcoin is going to be king, if I read the report correctly. You still believe that there's no flippening and that Bitcoin remains the king in 2022.
Right.
What's your thinking behind it? You've seen a year where Bitcoin started at I'm checking here 70% dominance. It's now at 40. What makes you think that Bitcoin's going to be able to hold on to that, or hold on to the number one spot?
Well, I think it's basically in a class of its own when it's competing as a currency or digital gold replacement. You contrast that with Ethereum, which I think is equally exciting. And Ethereum has plenty of competition, not only from other kind of layer one blockchains because of how high its fees are, but also from other layer two implementations, right? So where are transactions ultimately going to be settled? How are these communities being incentivized to actually provision and secure block space? The dominance of Ethereum as a layer one is declining, I'd say close to as quickly as Bitcoin's dominance overall, but Bitcoin doesn't really have any monetary competitors right now. So we can argue, except for stable coins, right? And again, that's why it ties back to the trade-offs that I just mentioned. So I think it's not necessarily that Bitcoin is so much stronger, is going to outperform Ethereum in the new year. It's more that it's going to be incredibly difficult, I think, for any assets to displace Bitcoin just based on its historical resilience and staying power, and that's going to basically be true until it isn't. And maybe I have the probability at maybe 20%. In the past, I didn't think we'd come close, but it's not a trivial challenge for Ethereum to take that position. And the other thing that I think people consistently forget is that the Ethereum merge is not a slam dunk transition. There are still a number of technical risks in essentially migrating an entire ecosystem to a brand new blockchain. That's not betting against Vitalik or the core developers. I know they've been really thoughtful about the rollout, and it's one of the reasons it's taken so long. But it is still a $500 billion migration of assets to a brand new tech stack and blockchain itself. So I think people underestimate that transition and the transition risk quite a bit. Now, if it goes off without a hitch and you see a real explosion in layer two blockchains and zero knowledge blockchains that are tying back to Ethereum's beacon chain and everything kind of goes smoothly, that's when I think you can much more seriously entertain like the flippening conversation for Ethereum. I'm long both, as well as some of the other layer one assets like Terra especially, but also Avalanche and Solana. So we'll kind of take a wait and see approach. But I actually think that you're talking about two different conversations. One is is this going to be a replacement for gold or fiat currencies, and then the other is how do you value these emerging tech platforms
exactly
relative to like big tech companies in terms of market cap?
I guess it is two different things. One is money and store of value, and one is tech is betting on tech. And I think Tushar, Jain, he made a great tweet about this. I'm not going to go through the whole tweet, but what he says in the tweet is he says something along the lines of, I'm trying to find the tweet. Here we go. So he says something along the lines of Bitcoin is underperforming Solana, Ethereum, and other major cryptocurrencies in this drawdown. It's worth exploring the Bitcoin decoupling thesis for an explanation why. And in the explanation, what he talks about investors wanting productive assets, and there being much more money to invest in productive assets. People are looking for what he called productive assets. And he said, look, even though strictly speaking, probably Ethereum, Solana, Avalanche aren't productive, in this discussion, they are productive. and there would be a lot more demand for these productive assets than for this, call it a non-productive asset. And so his thesis is that Bitcoin, I don't know if he talks about it in time, but he does believe it is going to be a decoupling, and he does believe that the layer ones specifically will beat Bitcoin in I don't know if it's the next year, but certainly that's his thesis.
Well, I think they're already close, right? If you kind of take the layer one assets collectively, they're close to flipping Bitcoin already. So, that is not necessarily something I disagree with, but really it's about like what is the relative market share, right? And what is the relative market size of those two different segments? I think where I agree with Tushar is that there's still a tremendous amount of growth potential for crypto platforms, just given the universe of applications that they're enabling. The question is, are we getting too far ahead of ourselves in terms of the development of some of those applications? I think if you look at NFTs, if you look at DeFi, the organic demand for those products is questionable right now. I think the speculative demand is obvious over the course of the last 18 months, but if we start to see, any type of leveling off or prolonged drawdown in interest in either of those classes, well, then demand for block space goes down, and then demand for any of these decentralized computing platforms, whether it's the EVM or something new like Solana, that goes down as well. And it's much more reflexive in nature than Bitcoin, which is completely divorced, I think, from that like crypto conversation, and is really just a macro conversation that's to be had, whether you are a believer in Bitcoin or not.
I mean, the way I see it, the economy can slow down, and there can be a macro discussion, and I buy all of that. But ultimately, I think that there's an undercurrent of a growth of this technology and the use case of this technology. I think there's no doubt that DeFi is going to continue to grow, and NFTs. There's no doubt for me that we've just started in the whole NFT game, and when that happens, you're going to need layer ones. You go spin it how you wish. You're going to need layer one power. Now, whether you're going to buy Ethereum or Solana or AVAX or all of them, and then bet on the bridges, I think that there is going to be an insatiable demand for layer ones. Before we talk about layer ones, and I want to talk about layer ones a lot, I want to talk to you about an ETF. And 2021 saw Gary Gensler. You have you've been very vocal against Gary Gensler. In fact, so much so that I wanted to have you and Gary Gensler and Hester Peirce on the show, but they declined. You called him a liar and a fraud. And so I guess that you're not happy about his Gary Gensler and his conduct. Maybe give us a little bit of background on that.
Well, I laid it pretty thoroughly out in the report. That's not something that I take lightly, to be as vocal criticizing a sitting chairman of a U.S. regulatory agency, because I do think that in general, honey goes a lot further in catching flies down in DC, and the goal, I think, the last decade really has been focused on educating policymakers versus attacking, right? And so there's really I think a knowledge gap that needs to be crossed in order for most policymakers to get this right. And it's ignorance versus malice that's driving some of the poor decisions or some of the poor policy, to the extent that's true. With Gensler in particular, though, none of that really applies, right? He's someone that has a deep understanding of how Washington D.C. works. He's led another major financial regulator in the CFTC. He's taught about crypto. He made a $120 million fortune from his work at Goldman Sachs. So he is extremely intelligent, competent, and hyper aggressive. And I think what people in general are afraid to call out or can't call out because they're ultimately potentially regulated by the SEC is the doublespeak and what I think is just kind of flagrant dishonesty. That if you take more than a couple seconds to kind of look at his thoughts on SEC policy and kind of what the reality is of the situation, you kind of know that they're just blowing smoke and kind of talking out of both sides of their mouth. And a couple of the examples that I put forth in the paper are, every single major crypto company in the U.S. has applied for a broker dealer, and the SEC continues to parrot, this line that these exchanges and all these crypto projects should come in and talk to the SEC and engage. In reality, their applications for broker dealer licenses have been held up by the SEC, right? If you look at the assets that have registered using something called the Reg A Plus exemption, which is a reduced filing requirement and kind of within the letter of U.S. securities law, there's only been a couple of projects that have gone that route, and one, Props, is ironically the only asset that has lost money for U.S. investors that have actually pursued CoinList, token sales over the course of the last couple of years. And one of the reasons is compliance with the SEC's guidance and securities law actually broke the protocol. And they just, developers cannot go to a regulator for permission and wait months and months on end every single time they want to make a minor tweak. The ETFs are another good example. The ETFs that were actually approved are toxic assets that cost investors 5 to 10% per year. When there are similar products that are orders of magnitude larger that are already being actively traded and kind of held in 401ks and IRAs through Grayscale and Bitwise and others, and those quasi ETFs should be approved. Instead, they're basically being stonewalled because they're based on the spot markets, which are not currently surveilled by the SEC or any other regulator. And so Gensler's approach has basically been, we're basically not going to approve an ETF until there's surveillance of the spot markets, and we need that authority from Congress. So when it comes to protecting investors, it's basically all lip service because they've approved something that's toxic, and they're allowing these kind of quasi ETFs to trade without conversion, and ultimately they're trading at a deep discount as a result, right? So investors are losing across the board, and I think Gensler basically just engaged in hostage taking at this point. But again, he knows better, and so I think any public comments to the contrary are dishonest. And I said what I said, so I stand by it, and I think the evidence is pretty obvious.
And do you think that there's any chance that we're going to get a Bitcoin ETF in 2022? Do you think that by 2022, the SEC get what they want? No.
Yeah, I mean, it's an election year. They're not going to pass legislation that gives the SEC this authority, and we're probably stuck with Gensler through the duration of Biden's first term. So I think the biggest question, kind of behind closed doors and on the crypto policy front is how do we neuter this guy and basically route around him, attack him, and basically just kind of win a war against a single kind of Lone Ranger individual that's single-handedly undermining the growth and potential of the entire domestic crypto market. Sure,
and I saw you tweeted this. Asking Gary Gensler to protect to protect people from the $12,000 airdrop that users are getting on Uniswap. I mean, we need protection. We demand that you protect investors from this horror. I love it. I love it.
Like the U.S. is listed next to North Korea, Sudan, and Iran as countries that are ineligible for airdrops. I think that tells you everything that you need to know about the leadership of folks like Gensler.
The US is also listed next to Turkey, Poland, Argentina, and Zimbabwe when it comes to inflation. So it's, I mean, you got to start. You got to start looking at what's happening in the US. Which list it's on. You are the company you keep, I guess. You are the company you keep. Anyway, let's move on from Bitcoin because I want to talk to you about Ethereum. I think 2022 has to be a big year for Ethereum with ETH 2.0 and the merger and everything else that's happening there. How bullish are you on Ethereum, and do you think that Ethereum maintains its spot as the dominant layer one smart contract blockchain?
Well, I don't think that's any question. The question is, will it maintain its dominance in market share? I think that's that's more difficult, right? Because the fees are still high, and there are other ecosystems that are getting developed, at warp speed right now. Solana, Polkadot, Cosmos, and Terra, et cetera, Avalanche. So I think it's unlikely that Ethereum is the majority of the market anymore. But that's not to say that it's kind of seen the end of its growth. I think Ethereum will be $1 trillion network, and it'll hit that $10,000 mark in the process. But markets are also forward looking, right? So the speed at which the merge takes place, and the speed at which kind of interoperable solutions and kind of liquidity between L1 and L2 and kind of L1 to L1 is developed, I think is going to have a big impact on Ethereum's growth going forward, because people are extremely bullish on Ethereum for good reason. But it is no longer the only game in town, and it's no longer the only stack that developers are building infrastructure on, which is a far cry from like the end of last year.
What do you think of layer 2 and this whole layer 2 narrative? And specifically now we're talking about rollups, and we're talking about two kinds of rollups. We're talking about this battle between optimistic rollups and ZK rollups. How does that play out in 2022?
The actual developments on layer 2s might take a little bit longer than people are appreciating. It's obvious that the demand is there. It's obvious that these blockchains work, and they do provide a really valuable scaling solution. We've seen this across countless of the top DeFi apps at this point, and NFT marketplaces like OpenSea. But I think the user tools, and kind of the abstraction of actually going from blockchain to blockchain is, I think that is an underestimated challenge right now, and it's going to take a little bit longer to resolve than a lot of bulls might be predicting. So I think the end result of that is the other layer 1s benefit, and it takes a bit longer for Ethereum to kind of capture all the upside of this like layer 2 development. At the same time, if those other Ethereum competitors start to get full and the fees start to go up, they're also going to need their own layer 2 solution. So I think we are kind of permanently living in this multi-chain world where you're going to have settlement between different types of blockchains and applications that are built on different stacks for different use cases. And it's really just a matter of time before I think most of them win. The question is like, how big will that winning marketplace be? Because you're probably talking about 2 or 3 different standards, right? So the EVM, things are going to have to be EVM compatible. Will like one of the other standards be something like Cosmos IBC? I think that's probably the kind of runner up right now. But what about Polkadot? What about Solana? I think those technical standards and the ecosystems that are going to develop, there's right now half a dozen or a dozen different attempts at creating alternatives to Ethereum's virtual machine. But that will probably narrow to just 2 or 3 within the next couple of years, and those would be the ecosystems that I'd be keeping an eye on and thinking about betting on as the developer tools ecosystem continues to mature.
ZK rollups, optimistic rollups, which one?
I don't know anyone that's bullish on optimistic rollups beating ZK rollups long term.
Arbitrum seemed to be. They wrote a Medium article this weekend explaining how long-term, actually optimistic rollups are a whole lot better.
I didn't see that particular post. I'll be interested to read it. If it happened this weekend, yeah, it didn't cross my radar. But Arbitrum is building optimistic rollups. So I would certainly hope for their own sake and their own kind of preservation, they're kind of bullish on their own technology long term. We'll see. I mean, the answer is probably a little bit of both, right? Maybe not every application is going to run on ZK rollups, but I think by and large, in terms of speed, scalability, and privacy, they're potentially a panacea. But again, I think there's so much in terms of usability, and there's so much infrastructure that needs to be developed for that to really take root and become dominant. we're really just arguing over timeframes here.
So if I hear what you're saying correctly, you're saying that it may not be Ethereum, but it's probably EVM that's much more the winner here than the actual Ethereum chain. If I'm hearing what you're saying, it's that there's going to be an insatiable demand for layer ones, and EVM is probably the one that has the most network effect. And so you're kind of going to get this insatiable demand for layer one EVMs. And it does matter. Some are going to succeed and some aren't going to succeed, but a lot of them are going to succeed.
Yeah, the way to think about it is like EVM block space, or IBC block space, right? Just anything where there's adequate security in the networks. Applications are ultimately going to migrate to the chains that have the right trade-off for their end use case between fees, security, and settlement speed. So I think
go ahead.
No, as long as Ethereum fees are where they are, it's difficult to bootstrap a new application that has any degree of kind of high transaction costs or high transaction throughput, because the per transaction fee is just prohibitively expensive. If you're doing settlement or large mints or large loan originations, things like that, obviously Ethereum layer 1 is fine, but otherwise it's going to have to move to either L2 or another L1, and whether the EVM is the right solution at that point, I think it's going to be one of them, maybe forever, probably forever, but I think right now we're kind of looking for that second and third technical standard from on the smart contract side.
Let's talk about the never-ending Solana summer. I think that's how you called it in the article. You said Solana is going through this long, never-ending summer. How bullish are you long-term about Solana and the developer activity on Solana? You are seeing a lot of money going into there. You're seeing a lot of amazing applications being built there. You're seeing a lot of use case. You're seeing a lot of stickiness on the Solana network. Addresses seem to remain active, much more than they remain active on Ethereum, because on Ethereum the people sign up but can't afford the gas fees. How bullish are you on Solana?
I'd say, again, Solana, Cosmos, Avalanche, and Polkadot are probably the next kind of 4 blockchains to watch. And then Terra on Cosmos by and large, but it is kind of going multi-chain with its focus on stablecoins. The answer is kind of all the above. I've invested in a couple of different infrastructure plays that are kind of building around the Solana ecosystem. I've done the same with Terra. I will likely do the same for Avalanche and Polkadot. I just haven't really gone that deep in those end markets yet.
That's the opportunity. A lot of people who are smart and in the know haven't started buying Avalanche yet. I think most big crypto funds are still underweight Avalanche. We said this a week ago on our show, that Avalanche kind of came from nowhere, and most people are underweight Avalanche for what there is there. And that may be an opportunity.
Well, there's 2 different things. There's kind of the core asset and blockchain, and then there's the infrastructure around it. When I say like exposed to the infrastructure and kind of application layer, it's basically private investments that I've made in infrastructure. So we're different applications on those other chains. So a little bit different. I'm not talking about the core blockchains themselves. I don't want to kind of comment on any one of those potential layer 1 alternatives. But I think if you're going to make a calculated bet as kind of a broader investment thesis, going long the alternatives to the EVM, or basically just the alternatives to Ethereum, is probably going to be higher beta than just betting on Ethereum itself.
So let's talk about a world where you are a new investor in the space, but you have all the knowledge that Ryan Selkis has, and you've got $10,000 to invest in what we call layer 1s, and layer 1 in this case means layer 1 and Ethereum layer 2. How do you distribute your funds? I mean, would you be more overweight Solana? Would you be like, where would you distribute your funds if you had $10,000 and you wanted to get involved in this layer 1 narrative?
Well, I won't give anyone investment advice. But
we don't do that.
Yeah, as kind of personal disclosures, I'm overweight the some of the assets that I just mentioned, right? The alt layer 1s. And that's really just because of the risk of the Ethereum merge and I think the speed at which that actually plays out. So in the meantime, I think you're going to see in the next few quarters a ton of continued momentum from some of those alternatives that are gradually siphoning off developer demand, or I shouldn't even say siphoning off, it's more just decentralizing developer demand. And one of the reasons that I think this is going to persist is if you are a new builder or a new investor in crypto, you are not going to experiment on Ethereum as a layer one, because out of that $10,000 budget, you're going to end up spending 10% of that just on gas fees, which is completely unsustainable for a new.
On a good day, 10%, but probably way more.
Yeah, depending on what your activity is, exactly.
Yeah. What about Cardano? You haven't mentioned Cardano. I mean, is it, Cardano is still up there as, the top 10 coins, I think. Is it still in the top 10 coins? It is. It's number 8 in the top 10 coins. Like, what about Cardano?
I haven't spent a whole lot of time studying Cardano. It's been very slow and steady development cycle for Cardano, and in terms of ecosystem development, it's not something that I've seen a ton of traction on compared to the other layer ones. So I know that there's a big enthusiastic Cardano community. I know they're not happy that I didn't cover it at greater length in my report, but I talked about the things that I thought were most important, and yeah, they were probably one tier below the other projects that I had referenced and wrote about in terms of broader user, investor, and developer interest.
Let's talk about NFTs. So 2021 was, I mean, I think, and I guess for you too, the growth of NFTs and the commercialization of NFTs that happened in 2021 was something completely unexpected. Yes, we probably thought that NFTs were going to happen, but the rate at which they accelerated in 2021, Melania Trump doing NFTs, I mean, we've now heard it all. What happens to NFTs in 2022? Do you think that we're in a bubble now? Are you getting people buying fancy JPEGs and not only punks and rocks, but you're getting people buying a whole lot of really nice JPEGs for really huge amounts of ETH. How do you feel about the activity there, and what happens in 2022?
One of the things that I think is really interesting when I was writing the report, I realized that in 2013, Bitcoin was about 1/10% of the gold overall market cap at its peak, right? So Bitcoin got to $10 billion, gold was about $10 trillion. And of course, it corrected 80%, 80% plus from over the course of the next 15 months until the January 2015 lows. I think something similar is likely going to happen in digital art and NFTs, where right now, if you look at the total art market versus NFTs, digital art is about 0.1% of the art market annually. And so you still see that there's a tremendous amount of headroom, like 100x potential to get to 10% of the digital art market, which is about where Bitcoin is now as a percentage of gold, right? So kind of using that analog, we went through multiple 80% corrections in Bitcoin over the course of the last 8 years until it finally got from 1/1000th to 1/10th of the analog gold market cap. I think the digital art versus physical art market is going to be very similar. So you'll have 100x growth in digital art over the course of the next 10 years, but there's going to be a lot of volatility in some of the underlying assets in between. And most of them are not going to have any bid whatsoever, right? So the effective price is zero, because the resale value for many NFTs is zero. There's no order book, right? What I think is different is Bitcoin was a shelling point for people to invest around, and it's a scarce digital asset that with a fixed supply. NFTs have no cap in terms of how many can be minted and how many different experiments are going to be run in the coming years. every major brand, every major community, I think is going to have some form of like NFTs to prove community membership or fandom. So you could have 100x growth in the market cap of NFTs over the next decade, but that is going to be spread out across many more assets. And the returns of an individual NFT are going to be much higher variance and kind of lower expected value versus Bitcoin.
So invest in the picks and shovels. I mean, then in a play like that, then the idea is probably not to invest a lot in the underlying JPEGs, but to invest in the picks and shovels.
Yep. Yeah, and that's how I thought about it right now. I was an investor in OpenSea and a company called Upshot, and I'm investing in a couple of different collectors that are really good and kind of top of their game. But in terms of like individual like profile pictures and those type of things, I haven't really spent a whole lot of time there.
So you don't have a punk or a rock hidden up you're not wearing your rock on your Apple iWatch.
Well, if I did, I wouldn't tell anybody at this point. But yeah, I do have a couple of NFTs. One of the challenges is actually, I have not changed my my Twitter avatar for basically 8 years now. So I think I will be much more excited about NFTs once South Park Studios has their drop early next year. Hopefully that comes to market.
Awesome. Let's talk about the metaverse. And when I say the metaverse, it's not meta, it's actually the metaverse. Mm-hmm. What do you think, first of all, of Meta and Facebook going into the metaverse, so to speak?
I think Web3 metaverse plays are going to be extremely hyped up. And I think gaming is going to explode next year in terms of like investment in Web3 games. Just because of what happened with Axie and some of kind of the very early winners. I think in terms of returns, they're probably going to be terrible because I think that's getting to be a very crowded space and kind of crowded market right now. And I think we're probably 5 years away from the hardware being where it needs to be for people to actually spend a legitimate amount of time in the metaverse, or at least any version of it that we think would be interesting. And I guess the perfect example for me is early on in the pandemic, I actually bought our entire team at Messari Oculus headsets, and we did a couple of like virtual cocktail hours, basically setting up my Quest and creating like this virtual cage was one of the most amazing, like surreal moments I've had with any tech. It's like on par with reading the Bitcoin white paper or getting in an Uber for the first time. And just that whole experience was amazing. I haven't used it in a year, right? So like, I think that it's going to be interesting. And the question is, at what point does the hardware and kind of the entire like ecosystem develop so that it is like an area that you spend a non-trivial part of your waking hours? I doubt that's going to happen anytime in the next couple of years. And like games are supposed to be fun. So if everything is just a play to earn game and you're literally kind of grinding out work in kind of the crypto gaming sector, I don't think it's that interesting. And I guess the last thing that I'll say is you need Meta proper, Facebook's Meta to basically spend $10 billion a year on the infrastructure. Exactly. That will kind of pave the way for a lot more of this development.
Exactly.
A bandwidth, graphics, just general computing standpoint. And crypto doesn't have the, maybe we have the financial resources, but we don't have the coordination skills to go head to head with a motivated like big five tech company.
So that's the way I said. I mean, I see Facebook building an incredible infrastructure for what will then become a decentralized Web3. So for me, when I think about the metaverse, what that is for me is it's Web3 metaverse, which means everything has to be decentralized. The money, the storage space, the computing power. That for me is, you want to talk about a metaverse, that's a real metaverse. But I think letting Facebook develop the tooling is probably where we want to be. While you were talking, because you mentioned you buying Oculus for your teams, I don't want to talk about specific projects, but I did see something. I know you have kids, and it's part of what I want to talk about, but I saw this, which, I don't know, this for me is the next level. It's effectively linked to a car's system. So how it works is it's linked to your car's system in terms of speed and in terms of the steering wheel and whatever else, and it kind of puts you in a driving metaverse, so to speak. So I don't know about you, but I have kids and we often go for driving, and driving is like the worst experience of their lives. And I just thought that is like an incredible, it's an incredible tool, and putting yourself into the metaverse in your cars is just something that I think is going to be great, especially when you think about the world of driverless cars. And what are we going to do in driverless cars? We would want to have experiences. What else are you going to do in a driverless car? Have a meeting, have an experience. I think for me, that's the way that it's going. And I think it will let Facebook develop. We should let Facebook and others develop those kind of tools.
Yeah, I mean, look, that looks cool, but I don't. From like a crypto or like an investment standpoint, I don't really know how to play that. So I stick by my comment that I think it's probably a few years away, and there's a lot of supporting infrastructure that needs to be built before we get the real interesting use cases.
Let's talk about bridges between layer ones. It's something we haven't spoken about. We are going to live in a multi-layer one world, and I guess the trick then is to have these amazing bridges. I think you mentioned earlier that the bridges were quite clunky at the moment. I don't know if you used the word clunky, but I guess it's not a great experience being able to bridge. You've got Thorchain, which is, I guess, a reasonable bridge, but has been exploited a few times and is in its teething stage. You have Layer 0. I don't know how much you know about Layer 0, but apparently they're now raising on a valuation of $1 billion, and there are rumors that Elon Musk is investing into Layer 0. I don't know if that's true or not true. How do you see the future of bridges? To me, bridges seem almost like the most important thing after the layer ones, and maybe even the most important thing full stop, because if the layer ones become too clogged or too expensive, it's the bridges that are going to let you bridge from place to place. And I don't see investors making enough of a fuss around bridges. How do you see the cross-chain world and the role of bridges?
Yeah, I mean, I think it's NFTs, DAO infrastructure, and bridges were kind of the three themes that I had for 2022 is the most interesting areas of development. So I definitely would agree. I don't think it's a trivial challenge to solve, and Thorchain is probably the largest project right now. But yeah, Thorchain, Layer1, Syn. I'm forgetting the full project name. But SYN is the ticker, are I think probably the three that have the most pickup right now. But I would expect that we're going to see a lot more venture funding in bridges and in infrastructure that makes bridging much easier.
Yeah, I mean, we are seeing that. As I mentioned, there is a company called Layer0 Labs. Rumor is that they are raising on $1 billion. They haven't come to market yet. They got a great way of solving this bridge thing. I think Thorchain is amazing. But again, hacked or exploited a few times. But I think for me, the future is very much in bridges. One more before I let you go, and that's the world of decentralized social media. Because that's something that, I think Dan Larimer was the first big attempt with Steam. Was it Steam? So Steam or Steemit? What is it called? Steemit. Didn't really go anywhere. Then EOS, he tried to do it again at EOS with, what is it called? The social media network that they launched, Voice. That was what it was called. I don't know anybody that uses Voice. Do you think that 2022 is the year of decentralized social?
I am extremely bullish on decentralized social plays. I haven't seen anyone really get the formula right just yet. And it kind of goes back to my comment on gaming. Like, games are supposed to be fun. Social media is supposed to be organic and not feel like a multi-level marketing scheme. So I think the early experiments in decentralized social have had, everybody feels like a salesman, I guess, instead of everybody feels like a creator. And whoever kind of solves that problem first, so that you have a really good like Web 2 experience and social network, but with incentives for creators, I think is going to do really well. And one of the things that I think would go a long way in terms of kind of filling that gap and solving that problem is creating something that's more similar to lotteries for going viral, right? So, basically instead of getting paid per engagement or paid per click or paid per like, you have actually interesting viral bits of content that are rewarded at the individual level. So the reward is not like how much time you're spending as a serf just generating mindless content and like intentionally going out of your way to create things that are ultimately going to get you paid. It's a byproduct instead. I think there's a couple of different projects and entrepreneurs that are working on that, but it's all still incredibly early, in large part because I don't think the systems were scalable enough, and I don't think you could actually do on-chain decentralized social networking until very recently. So we'll see more of that. And again, I'm excited to spend a little bit more time there as an investor next year.
Yeah, I mean, you had Bitcloud that launched with huge money from Andreessen and a whole lot of others. And I think they've rebranded to DESO. They got a Coinbase listing a few days ago. They are probably on the right path, although I must say, I think that Bitcloud was a bit of a clunky experience. Like when I used Bitcloud, and I am an investor, I bought Bitcloud, I bought Cloud, which is now DESO. Didn't have fun. It just wasn't fun. I mentioned to you when we were talking, and this is no product endorsement, and to be honest, I'm not even investing in this, I'm just a user like anybody else, that I have been playing around with this BBS. And to me, it's the first social media experience on Web3 that feels like a social media experience on Web2. And I think the concept of earning much more for tweets or posts that have gone viral works much better here than I have. And I think for me, this is the first, and again, I say I'm not an investor. I haven't invested in this thing. I've just found it, used it, having fun with it. It's the first time that I think I've always bought into the Web3 social media narrative, but I've never seen an application that competed or compared to the Web2 applications. Nothing beats a good interaction on Twitter and etc. And this is the first time where I think I've had more fun on a Web3 social media application than I've had on a Web2 social media application. And so I think, and you don't at any point realize that you are on a Web3 application because there's no MetaMask, there's no gas fees, there's nothing. There's none of that. It's just, it is what it is, and you just use it and you play. Maybe have a look at it. But that gave me hope that we may actually see real social media applications on blockchain in 2022, and creators will actually be paid fairly for the content that they create. That was the first spark that I saw that actually made me believe that.
Yeah, there's another company that I'm close to. Nothing's been announced yet. Kind of in general about the project, it's still very kind of early stages. But I've just really liked the organic experience. It's GM.XYZ. Similar, kind of look and feel of a decentralized Reddit, but it doesn't feel like you're using a Web3 application where you have to connect your wallet. A lot of this is optional, and it's not necessarily a must in order to sign in and actually use the product. So I think those are exactly the right experiments. Whether or not they take off, these are angel stage or seed stage startups with extremely small teams that I think are on the right track and on to building something interesting. And we'll kind of see how the race unfolds. But I think you're going to see a whole slate of early developments next year, and one or two of them will hit, or it might take a few more years still for us to get to that tipping point. It feels like the tipping point is close, if not here, though, given everything we've seen recently in terms of censorship and kind of the momentum behind NFTs and kind of user and creator ownership.
Right, before I let you go, Messari, you guys had an amazing year. You built an amazing business. I think your resources and the quality of research that you guys put out and the quality of data that you guys put out is the accuracy of the data, the way that you guys measure things is unparalleled in the industry. Maybe just 2 seconds about what we can expect from Messari in 2022, where you guys are going, what there's a lot of our viewers are signed up, and if not, they will be signed up. Where to from here at Messari?
At the end of the day, our mission is to organize and curate crypto information at scale so that it's a little bit less scary for people to enter the market, and we can actually help people make smarter decisions once they're here. And there's really two sides of the business. There's the kind of market intelligence side. I call that almost like the Web 2 side of the business. It's subscription research and data. And we have large enterprises and all the way down to individuals that are subscribers to use our data visualization tools and actually get some curated research and alerts and monitoring for the different networks that we cover. On the other side, we have an entire suite of what I call Web3 services. So we're playing a very active role in providing services, starting with essentially an outsourced investor relations function for DAOs and protocol communities. And we do that by actually engaging with the communities. In many respects, we're getting paid by the DAOs themselves through treasury unlocks. And we'll do things like quarterly reporting or kind of bespoke ongoing research just to get a little bit more oxygen to these projects. And we kind of match the communities with independent analysts. So we're more of a marketplace for independent research versus just like a paid marketing shop. So I'd say both of those are growing equally quickly, and we're going to be doing a lot more on the Web3 side, starting with the new Governor product that we rolled out a couple of weeks ago. Essentially aggregates and allows for active participation in protocol governance.
Listen, I must say, I've watched your growth since I don't know when you guys started, whether it was 2017 or 2018, or whether you came to market in 2017. But I mean, really, I think one of the most impressive companies in the space. I must say, I think you're one of the best operators in the space. I think the level of integrity that you operate at, and the level of performance that you operate at, and then the level of content that you bring out is incredible. I think that the difference that a company like Messari makes in the space is invaluable. You cannot quantify how important a company like Messari is and founders like you are in the space. So well done, my man.
I appreciate it. And hopefully we keep up the momentum.
I think before I let you go, I guess my best part in the whole report, like the report's great. The report it's a really good report. It's all 200 odd pages. But I guess there's one part which, when I read it, was like, this is it. It's the best part of the report. It really is. And it's this part over here where it's life advice. And it says, this is probably obvious, but I don't know what I'm doing, and neither do you. But if you're fortunate enough to do so, get married, have kids, move to the burbs eventually, you will not give a fuck about 5% swings in the market when your day ends with a 5-year-old laughing about one of his farts, a 3-year-old telling you a story via a 3-minute run-on sentence, and a half-naked 1-year-old tackling you at the knees during your final Zoom call of the day. If you're reading this, you're hopefully a time billionaire. That does not change the fact that you are the tail end of many relationships. I read this post once per year, and that it is always day one. Everything is in your control. Now off to play with my kids. I've earned it. Fam, happy holidays. So I think with that, I'm going to let you go and play with your kids. Thank you so much for giving us this time, giving the Banter family the time. We're big supporters, and thank you for all the insights that you shared. And thank you for the difference that you make every day to the crypto community, because you are one of the people that, in my mind, is one of the most critical, pivotal founders in the space. So thank you, my friend.
Thank you, Ran, and hope you have a happy holiday. We'll do it again in the new year.
Great, my friend. Thanks a lot, Ryan. So good to see you, my friend.
Take care, everyone.
Banter fam, I'll see you guys again next year, unless something happens on the markets. Until then, go and have a great time. Go and spend time with your family. Stop worrying about the 5%. You will not give a fuck about the 5% swings in your markets when your day ends with family. And that's exactly what I encourage you guys to do. Go and have a great time with your family. The markets will be there next year. This is not a market for selling. It may be a market for buying soon, but there's going to be enough time. We will see you guys again in the new year. Until then, have a great time, my friends. Happy New Year. And thank you for all your love and support in 2021. See you guys in 2022, friends. So smart.
Yeah, and wise.
He's wise. He's wise and he's wise and smart.
Good package.